Hello everyone, Kolonji Murray with TaxAssurances. Just want to do a helpful video around how to respond to an IRS audit. So every so often, every tax season, I do come across, probably once or twice, a client that gets audited. I'm the type of tax preparer that tells, especially someone that has a complicated return. So if you've got investments, if you've got a business, if you've got a real estate, something that makes it a little bit more of a complicated return, that if there's something that, it kind of stands out. I've even had people that have medical expenses, but if there's something that kind of stands out as something that I, as a practitioner, recognize that is out of the norm, then I tell them, like, look, there's a very good chance that you're going to be audited. And I tell them that not to scare them, but because it's something that in my experience and the experience of the industry, that it just doesn't, again, seem like it's part of the norm. But not to be scared about it. That's the most important part. Like, you're not, the only time you should be scared of an audit is if you're looking to commit fraud because you don't have any way of backing up the expenses. But as long as you've got the receipts, as long as you can show that there was a legitimate deduction that is to be had, if you've got invoices, basically proof that shows that you did spend this type of money for whatever it is. So again, whether it's a medical expense, whether it's fixing doing a lot of work, a lot of rehab work on a home. Just reflecting on my last experience with an audit with a client. It was a client that had a 2-family home, and for the part that was the rental portion, not the part that he was living in, but the part that was the rental portion, he had a lot in terms of repairs that needed to be done. And those repairs are what were the trigger for the audit, because he spent a couple of tens of thousands of dollars to have that done. And like I said, it was a situation where when I was preparing the return, I said, make sure you just have all the receipts, because these expenses are kind of above the norm. It was a situation where damage was done, repairs needed to be made, and they spent a lot. So I recommended that they have those receipts, and that's what we did. So it was a situation, we did the return, let's say in March, and then by like September, October, the IRS sent a letter letting him know that, hey, and it doesn't say like, it'll say like it's an audit, but they say, hey, we recognize that you have these expenses. Do you have the receipts for those expenses? If you do have those receipts, then send us copies of those receipts. So that's really kind of the way that you want to respond to an IRS audit. It's, it usually is kind of that simple. Obviously, they're more advanced and more, involved audits that the IRS or even the state will do. But as long as you have the receipts for your expenses, as long as you're able to show that there was a legitimate business purpose to it, that can be the long and the short of what that audit is. And again, that's the best way you kind of want to respond to an IRS audit. If you have more questions about that, by all means, you can reach out. But until then, have a good one.